it's shocking, I think, that you get these benefits at a lower price point in lots of markets. The equivalency of what you're getting for what you're paying and how that asset business underwrites and how it performs and what you can do to it, they're not even remotely close to the same investment when you're talking about a return on your capital. Welcome everybody to Self-Storage Income. And today we have an interesting topic, one we haven't touched on, but I should say that I spoke about this very topic in Denver. And
Perfect.
That was comparing storage to other real estate investment types, particularly like duplex. And the reason why we brought this up and why I talked about it in Denver was I was on stage and I pulled it up and actually showed it. I pulled up, said, let's look here at all of the listings. So we jumped on Zillow or Redfin or whatever it was and said, duplexes near me, right? And the first one, 1.3. The next one, 800,000. The next one, 1.6, and so on and so forth. And then I said, okay, well, why don't we look at storage facilities that were under 20,000 square feet? Still way bigger than any duplexes, right? And so we pulled that up, and it was first one, 300,000. Next one, 500,000. The next one, all under anything the duplexes had even shown for. And that was enlightening to the audience, right? It was like, wait a second. What? Right? I think a lot of people think, first of all, storage commercial assets, it's this huge investment, big buildings, on and on and on. And it's not that that's not true. Of course, there is that, but there is a wide scale. And I think this podcast, we kind of wanted to look at the comparison and talk about those two different things and what are the differences, and maybe the pros and cons, and what it takes to invest in a small storage facility.
Yeah, I think it's a fantastic topic. Like Pace has talked about before, it's like all the different directions that you can go. It's not a problem in real estate of really succeeding. Like you can really succeed at anything. Like you fail because there's just so many ways to succeed. You just don't pick one and go with it. And so I think for people, especially just starting out, really recognizing the value, right? Seeing not only the current value, but that value that you can achieve through your value add, whatever that is, through your management, and going in and that business model applied to 4 units, or that business model being applied to a 20,000 square foot facility with 100 units or whatever it is. Very, very different worlds, but again, you're able to get in at a lower cost basis a lot of times. A lot of really, really good benefits to that, and hopefully we can shed some light on why a small storage facility might be a better option than a duplex.
Yeah, and I think the major hurdle that most people have is exposure. So the first and foremost, it's a comfort level, it's an exposure level. I get a duplex because I've rented. I live in a home. This is a home, 2 doors.
Or they want a house hack.
Yeah,
super
house
common.
hack. Great way to go about it, right? So there's all of these reasons on comfort levels that they are familiar. They understand the duplex. And then when you move into storage, then all of a sudden it's, I don't understand that. And first and foremost, I get that. It's different. It's not as easy for someone just coming to grasp. On an investment side, though, it actually may be easier to grasp the differences and the pros and cons than simply owning it, having it. If we're looking at it like an investment, the pros and cons start to change. And what do we think the pros and cons are? And even on a facility, there's, the first easy one is just doors. How many doors, right? Now, you may say, okay, it's true that it has more doors, but on a duplex, I get more money per door, right? Well, that's true. If you have a 5x5, you may be getting $50 a month. And if you have a rental property, you may be getting $2,000, right? Now, while that's true, You also have to take into consideration, though, things like margin, what you actually keep, and the reason why people buy. So storage facilities people buy as an investment. They don't buy it for any other reason, right? So you buy it off at a cap rate. You buy it for cash flow. Now, that's not really true with duplexes. People buy duplexes all the time that don't cash flow. That's common, right? That's a normal thing. And you don't do that with the storage facility. It's only an investment. The value that it provides is only what you can get out of it. If you're going to buy it and it can't cash flow, you shouldn't be.
This is one of the biggest things that comes to mind for me is that not only the value difference and how those assets are evaluated and valued, but also your ability to affect that value. Like once you actually get in there, I feel like so much of and have observed that so much of the residential duplex, multifamily, all of that is really dictated a lot by market factors and those macroeconomic elements that you really don't have a whole lot of control over. Whereas in storage and a lot of markets, you really do have a lot of control over driving that revenue. And again, like you're talking about, being able to really manage those margins. So those are a couple things that really stand out to me when we start evaluating both of those asset classes.
Yeah, one more is a business and investment, right? And you're right. I feel like housing and duplex, they are driven by other factors that aren't making money. And that is a problem if you're buying an investment. It's why I've always had issues with the housing market, because I may buy a rental property, but the reason somebody else is buying that rental property may not be because of rent. They actually want to live in it. So they're willing to pay things that have nothing to do with the income that it's generating because they don't care about it. They have nothing to do with that. That's not how storage works. And although you may get a lower price per door, you also, though, the rate of ups and downs are the same. Meaning that if you have a duplex, you have two properties, if you raise rent, right, if you want to increase that revenue by 20%, you have to raise rent by 20%. In a storage, it's the same thing. The only difference is instead of it on one door, it's spread on 50.
Yes.
Not 50, but I mean, $2,000, let's call it 10, 15 doors. So that 20% is a fraction of the impact on the end customer. So it is easier to raise rents. And also, it's a risk thing. Now, I've diversified that risk of tenants leaving amongst way more doors. I can actually take on more people leaving. I can have vacancy rates that are higher. The impact isn't nearly as big. A duplex, if somebody leaves, you're in trouble. If you don't fill up that other side,
so true,
you're negative. You don't even make money. So you don't have the ability to even take on vacancy. Because it's concentrated only in two sources of revenue.
Exactly right. And to that same point, I know something that you've talked a lot about as well is that ability to affect that revenue and have that churn due to the fact that we have month-to-month leases. We don't have the long-term leases. And I think a lot of people have viewed that as a negative, saying like, well, it's less secure because it's just month to month. Well, in reality, I mean, again, there's some give and take, but all said and done, you can afford that churn, you can afford that vacancy while also driving that revenue. And I mean, we do this all the time.
All the time.
We drive revenue, drive that square foot, that rent per square foot that we can command at the facility. And I mean, almost every time we're seeing a lot larger revenue per square foot at those facilities, even with less vacancy than what we started with.
And it's shocking, I think, that you get these benefits at a lower price point in lots of markets. So it's true that not every storage facility is $300,000, of course. But then if you're talking about that, you'd be like, well, of course, not duplexes. We're just adding doors at this point. So yeah, if you go up in doors, a duplex isn't worth that either. So if you want to replace it and go to 100 doors for your duplex, that's now $50 million. You know, storage, yeah, it can go up to $5 million. But the equivalency of what you're getting for what you're paying and how that asset business underwrites and how it performs and what you can do to it, they're not even remotely close to the same investment when you're talking about a return on your capital. Are you a new self-storage investor and want to know what that facility is worth, what the risk is, how to underwrite it, well, that's exactly what we do in a feasibility study. A feasibility study, we actually look at the market for you. We look at the finances, the underwriting, we show you where the upside is, the downside, and all the risk. That is actually what you can provide to banks to get capital and investors. It's a big worksheet which most banks actually require. So if you want to know what a storage facility is worth that you're looking at, come to us, follow the link in the show notes, and we will tell you. When you get into things like appreciation, other things like that, duplexes can be benefited from for appreciation that storage facilities aren't. So it's true that the very thing that we're talking about that we like about it is that we can affect the income. The truth of the matter, though, is if in that facility you don't affect the income, meaning you don't increase the income, you're not going to get hardly any appreciation, right? Now, that's not true for duplexes. And you have duplexes that in Boise or any other market that actually rent changed very little, but market rents changed, what they could get for it changed, and the cost to build changed, and demand for it changed, and so their appreciation was really, really big. Now, technically, I guess that's kind of true in storage, but it's not the same. It's not the same effect. And so you do need to drive overall revenue. And there's mechanics to do that, though. That's the beauty of it, right?
It's like retail.
Yeah, it's like retail. Now, other people may say the downside, I guess, is, though, more doors, more problems, right? I mean, I think technically that's true. I would argue, though, that having people live in your home is way more problems than if I had 50 doors in a storage facility that I'm going to experience, probably. Or maybe the rate of problems may be lower, but the magnitude of them is going to be way bigger on a duplex than it will. A storage facility may be a payment processing problem. It may be the gate didn't work. So, something that you can do easily, take care of it, is not a big deal, anything. When you have people living there, you have toilets, you have water, things go bad.
Yeah, right? Things that truly affect people's life.
Yes.
Their families, all those things, a lot bigger severity. And then, even to that point too, the eviction process is another huge piece of this puzzle that comes to mind when we're talking the difference between residential real estate and storage. I don't know how many nightmare stories you've heard from a lot of our friends in residential world, this past year, especially with squatters and everything else going on in these different markets and trying to evict people out of homes. Total nightmare, something I personally wouldn't want to deal with.
No.
Storage facilities, so much more easy. Yep.
Just leave.
Yep.
For any reason we see fit. And
this isn't legal advice, by the way.
That's right. But so it's like, you need to talk, you need to actually work, though, with those tenants. And you actually, like when you're working on getting renters, you have to abide by these laws. You can't discriminate. You can't there's all these things that go into it. And making a wrong choice can really get you into trouble. Where in storage, they don't pay, they're locked out. We'll evict them and sell their stuff. Like it's just more lenient. So I think when you're looking at this, a lot of people don't realize that for most markets in the United States, a duplex is comparative to the small storage investing. And I just don't think people realize that. I think that they think to themselves, or to even single family homes. You can go into most third tier markets and find storage facilities that sell for the price that most middle class single family homes sell for in most markets today in the United States, because housing has gotten so expensive.
Yeah.
And it's, these aren't huge, nice storage facilities. These are small. Sometimes they're junky. It's not like this is a perfect investment or anything else you're getting. But when you're talking about a comparison in use of capital, cash flow in most markets in the United States for, single family home, that's really hard right now. That's really hard. And then you combine the debt and the interest rates. It's not that storage is easy. There's another big problem with storage, and that is not the differences, not that the operations, it's more, right? So the differences that are bad for storage is operations. It is more. You got to do more. You have the actual problem of opportunity. And what I mean by that is that single family homes and duplexes are everywhere. They're everywhere, right? So storage, there's just a fact, is not even close to as many. But there's very few in comparison people looking to invest in storage compared to single family homes. If you go to buy a rental property today in basically any market, you have people all over trying to look at it, to underwrite it, to buy it, see how they can make it work, right? Mm-hmm. You can go to third tier markets and get a small storage facility, and there's not a lot of buyers, if any, even trying to in that market. So it is relative, but the fact of the matter is you may have to drive to get a storage facility that you want. So if we're sitting in Boise, I'm in Boise, Idaho, and we want to buy a $500,000 storage facility, I'm probably going to have to drive to another city. I'm going to have to go to a small rural city that's an hour away, right? Mm-hmm. If I want to buy a duplex, I don't have to do that. Now, I don't know that duplex will make money,
right?
Cash flow, but
that's the key.
Yeah, that's the key. So I think this comes down to, once again, when we're talking about an actual investment in business, when you compare them, I don't think that there's really a comparison. And I think that the opportunity is there. When we're talking about other things, yes, it is different. But it's an option that few people, I think more people are exploring because of information, like this podcast, but also accessibility. When home prices started to get up over $500,000, all of a sudden your range of investment opportunities starts to rise. Mm-hmm. If I have to raise money from family and friends to buy an investment property that's a single family home, why wouldn't I do that for a storage facility or for any other investment? Mm-hmm. Right? It changes the way you look at opportunities of your capital.
Yeah.
If it was just, I'm just going to go buy it and interest rates are low, it's a $200,000 home, it's going to make some money, I've got savings, I can buy it, right? But all of a sudden, as those prices get up, as you have high interest rates, as these markets changed, I think it's changed the way people are looking at real estate and their opportunities. And I think that's a good thing. Because when you get into the small storage facility market, institutional capital doesn't play. So that's where that's going to be driven. It's going to be driven from beginner and small investors buying them. And that's where the opportunity lies. Mm-hmm. Technology is the name of the game, and how you operate your facility and the efficiency at which you can operate will depend on the technology you use. Your property management system, what it allows you to do, and what you have access will determine the outcome of how that facility performs. That's why we go with Tenant Inc. with their product Hummingbird, because they are the best in class. When dealing with automation, when dealing with move-ins, customer acquisition process, improving my online acquisition process, they are bar none the best. So if you are looking to automate your facility or operate it in a best-in-class way, make sure you guys are looking at Tenant Inc. and their product Hummingbird. The link is in the description.
Some things that, we've talked a lot about some of the pros and cons here. Obviously we talked about the ability to affect that cash flow, the retail aspect of self-storage and being able to go in and adjust rates, to adjust management, to, really have an effect on the value of that facility, not only for yourself, but potentially on an exit, which I think is really important to be considering when you're starting out, as how you're going to exit. Are you going to refinance? Are you going to sell? What does that look like? But one of the things, especially talking small facilities, that I think is a huge downside is that you can only affect your expenses so much. So we've talked a little bit about this, I think, on previous podcasts, but you can only affect the expenses on the downside. You can only restrict your expenses so much, which is why we like pulling that revenue lever, right? So we go in, increase rates, manage revenues, those kinds of things. However, with a small facility, that expense ratio is probably going to end up being a lot higher. You're not going to be able to have the resources, all those kinds of things that you would want to have with a larger facility and some of those things. But again, too, if you're looking at a duplex, you're not going to be building out a team to manage that thing either. So just some things as you're looking at storage, it's not, like AJ's talking about, it's not that, one or the other is just like this easy, no-brainer solution. It really just comes down to what, temperature you have to do either one of those things and what your appetite is for, having a single-family house or dwelling, residential real estate, or more of the commercial side, retail side, going that direction.
Exactly. I think that right now we're in a place in the market, there's more opportunities than we've had before. And those opportunities come with challenges. So, which is how it always works. But there's more opportunities for capital due to education, due to information, due to opportunities to even find it, than there has been in a long time. And I think for people, they need to be considering a lot more of those options. They need to be looking at real estate as more of a global thing as opposed to a concentrated thing into a few select types. We have seen the real estate industry overall has changed wildly in the last 10 years. We've seen major asset classes in real estate that were staples go under and ones rise. And I mean, we've seen single family homes go under. It's, the last, since 2008, the real estate market has gone through it. And it's changed a lot the way people think about it and how we look at the investment. And I think one of the major ways is that the market, people don't trust as much as I think that they did. Like prior to 2008, there was just this overwhelming sentiment that you just buy it and it works. The market just makes it, right? And I think that's one of the big changes is people go, no, the market can actually kill me. And that's good. That's a really good thing to know and change. And with that opens up your eyes into what it takes to be successful in real estate, what an investment is, how that value is derived. And when you start looking at those things, you can start really comparing options from an investment standpoint. And I think all of those things are good. I really do. And I think that these cycles we move through, and we always do, will continue to. And opportunities change within each cycle. What we do is the same. We haven't changed our value add strategy. But how it's deployed and how we execute, that has changed. And it does change and it will change. And I think that the cycles, when you get good at doing an investment strategy, you can take advantage of the cycles instead of letting the cycles take advantage of you. And that's one of the big keys to this, that we're talking about comparing assets. Really, when we talk about it, we're obviously biased because we're talking about it from our perspective of a strategy to buy a storage facility and make it worth more. If your strategy is, I don't want to do anything like that, I just want it to appreciate or be worth more, and I just want to own it, I don't want to have any problem, that completely changes, like you were kind of mentioning in your philosophy. But then that also changes your opportunities through those cycles. We're in an interesting point in the cycle where the interest rates have caused buyers and sellers of real estate to struggle getting what both wants. That displacement of value on the market creates opportunities. We haven't seen that same thing, though, happen in single-family homes and duplexes. They've been actually relatively unaffected by higher interest rates,
right,
except if you're a buyer. That just means a lot of people want to buy and they can't. But sellers, we haven't seen tremendous price shifts. We haven't seen, it's not like markets are very confused. They're still selling. They may not be selling in overnight. It may take, but they are. We haven't seen that displacement. I think most of that displacement's gone on the investment more type assets into things like commercial real estate. And so I think there's a lot of opportunity there, and I think that needs to be considered.
Yeah, I couldn't agree more, man. So, I mean, it really just comes down to, all said and done, what you want to do. Do you want to be in residential? Do you want to be in commercial? Yep. Again, there's pros and cons to either one. Really comes down to your appetite, your goals, your aspirations. Both of them I would strongly suggest you run as a business and take very seriously. None of them are easy. Just because there's no toilets or, this or that with storage. I mean, the amount of issues that we deal with on a daily basis is just unreal. It makes me want to smash my face through some glass or something some days. But, it just really comes down to truly what you want to be doing, where the opportunities lie. It might make a ton of sense for you to go out and purchase a duplex. It might make a lot of sense for you to go out and buy a storage facility.
But they're both options. And that's what's changed. Mm-hmm. I don't think anybody would have even thought of 5 years ago.
Yeah, isn't that great? Yeah. And then too, I mean, on so many fronts, like you were talking about, where I really like that point you made where, the pricing increases in housing has made all of these other asset types more relative and more acceptable, not only just from like a purchasing and selling standpoint, but also from like a banking standpoint as well. Yep. Banks are more familiar with storage nowadays than they've ever been, which is a huge benefit to everybody.
Huge benefit.
Again, all the information like this podcast, everything that's out there, there's just so much more nowadays. Again, going back to the opportunity piece you were just talking about, for people to go out there and not only find these deals, but to truly capitalize on them, get themselves, their family set up, all those kinds of things. And it's awesome to see. And again, like you said, with the cycles going through, it's needed. We have to have this competition. We have to go through the changes. We have to have that healthy fear of markets being able to destroy us, because they can. They have.
And they will.
They will. Careful. Exactly. So just continue educating, look for those opportunities, capitalize on them. Don't get yourself into something that you actually don't want to do.
That's right. Get out there and get it done. Hope that helps everybody.
We'll see you next time.